Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Wednesday, July 17th. We just had the grain and livestock markets finish up trades for the day. Before we get into today's price action, I do want to remind you, if you've not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com, select free trial, and then you can select the markets that interest you most, whether that be grains, livestock, energies, or precious metals, which have been on the move quite a bit here as of late. Got a great team in-house that puts that together. Also, before we get into the prices, if you're watching this on YouTube, give us a thumbs up and be sure to subscribe for more daily updates from the commodities space. Now that we got that out of the way, we can go ahead and get into today's price action. So corn, beans, wheat, all mostly higher with the exception of a couple contracts out there. We'll start with September corn, 2.25 cents higher to settle at $3.98. December new crop futures, 3 cents higher to $4.11 Over on the soybeans, front month August futures, 6.75 cents higher to $10.97 New crop November contract, it struggled a little bit more, down 2.25 cents to settle at $10.41. Moving out to the wheat markets, we saw September Chicago wheat 8.5 cents higher to settle at $4.39 Hard red wheat 10.75 cents higher in that September contract to settle at $5.61. And out in the spring wheat, 16 cents higher in that September contract to settle at $5.91 On the livestock side, again, mostly higher on the day. October cattle, $1.05 higher to settle at $185.57. Mentioning October because it has recently overtaken August in terms of trade volume, and with first notice day just about 2 weeks away in that August contract, you're going to continue to see that volume pick up in the October contract. The feeders, front month August contract down 7 cents, but the next month's all marginally higher on the day. Lean hogs tacked on to big gains from yesterday's trade. The August contract today settling 37 cents higher, 91.65. You go out to October, December, February, you saw bigger gains, $1 plus, $1.50 rallies on the session. So nice day for commodities, agricultural commodities specifically. I do want to touch on a couple of these. The December corn contract is what we've got pulled up here. And you may be looking at this saying, hey, that's not a December corn contract chart. Well, it is. It's just an hourly chart. And the daily chart obviously doesn't look as pretty. But I wanted to zoom in on the hourly chart because it shows that we're building some ground here, building a base in this market. So long as we can defend the low end of this range near $4 to $4.03, I think the bulls have a good case to be made for some upside potential here. Now, today's close, right at the upper end of this rectangle that we've been trading in really since July 8th. So we've been chopping around. There's been some good intraday opportunities, but the bulls really want to see a conviction close out above this resistance to potentially spark some additional short covering relief. Where would those next potential spots be? Well, I think the next potential spot would be near 420. And then above that, you'd be looking at the breakdown point from that quarterly stocks report, which is closer to 430 and 434. So there are some silver linings out there, but the bulls certainly have their work cut out for them to get to those next price objectives. The first one being, let's get out above 413 to 416. If we can do that on a closing basis, I think that puts a nice little tailwind in the market. Now moving over we'll jump over to the cattle complex real quick. Take a look at the December live cattle contract. We've just been chopping around relatively sideways since for the last couple of months. And I think there's probably some more upside potential. I had mentioned the August contract going into first notice day here in a couple weeks. With the cash market still well above the futures market, I wouldn't be surprised to see those converge a little bit. Maybe the futures do a little bit more work. And if that's the case, I think you see some of these deferred markets rally. So if we get December up here near 188, 189 and change, maybe 190, I think that could potentially be an opportunity, especially for hedgers to manage some downside risk. There's still a lot of growing concerns out there in the cattle market. I know that there's a good fundamental backdrop, but the participation from the funds has really been lackluster as of late. Then you've got lingering headline risk. You've got an election, you've got bird flu, you've got a little softer economic data, and our funds going to really want to stick their neck out too far with those lingering headlines. And you're also in peak demand season right now. What happens once we get past that? So again, the overall fundamental backdrop for cattle, pretty steady, but there are some headline risks out there. Options can be a great way to mitigate some downside risk while keeping the upside open, so that's certainly something we're looking at for clients. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Soap with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.